Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I'm going to go over some comments here, hit up some of these questions and whatnot. It says, I'm just wondering how supply chain disruptions and expensive energy will affect the miners. Won't they just stop producing due to the costs and challenges associated? Well, yeah, metal prices are going to have to go way higher. And what happens is energy goes up first, and then it just goes everywhere and increases the price of everything because energy's used everywhere. You know, either electricity or diesel or whatever it is. And what happens is your costs go up of everything, your input costs. So the price on the back end is all going to go up eventually. So it's just feeding its way through the entire system. It says, what we do not hear from Andy is the planned tapering. Commodities will get hurt if that happens, and the Fed will do so in November 2021. What is your take on this, Andy? Tapering is not going to impact it. In fact, I think it's going to help commodities go up more. Tapering, so the Fed loosening, the Fed is manipulating the markets. They're holding interest rates down. When interest rates go up, it's going to cause the rotation of money to happen. Look at history. Every time they stop doing their playing with stuff, what happens is the money starts to rotate. So what they're trying to do is they're trying to hold interest rates down. They're trying to hold it down and keep the money from rotating. They're trying to keep it into bonds and stocks. They're trying to elevate those areas. When they taper, and if they taper, whenever it happens, I don't know if they're going to do it. They're probably thinking about tapering. I don't know. They use all these stupid terms. When they stop tapering, when they stop buying bonds and interest rates go up, good luck. Everyone's going to sell their bonds. The bond market's going to be a bloodbath. Bonds, if we were to let interest rates go up, bonds are going to rotate out and they're going to go right into commodities, exactly where they're supposed to be. And stocks are going to go down too if we have interest rates go up because their PE ratios are up there at the moon. So in my opinion, if we taper, it's going to actually help precious metals and commodities because interest rates will go up. And we already have this huge supply-demand problem in the real estate market. And I know some people think that them buying mortgage-backed securities is causing a problem. What I think people are doing is they're trying to lock in low interest rates when they're low. Yes. But it doesn't solve the supply-demand problem. It doesn't solve it. You're still stuck with a home shortage of 5.5 million homes. You're stuck with that. Buying mortgage-backed securities doesn't solve that problem. It doesn't produce more homes. So you're stuck with this shortage. And if we can't ramp new home builds, and if, let's say, we have inflation, it's going to drive we're going to have massive inflation, in my opinion, but that's just going to drive the input costs for home builders up. And if it drives new home prices up, well, you're just raising the entire price of all of the existing homes higher because they're going to equal each other out roughly. People are going to have to say, I'm going to buy a new house versus buying an existing home. But if the new home prices continue to go up, your existing prices are going to continue to go up. Tapering, I think, will hurt bonds and stocks. I don't think it's going to hurt commodities. Commodities are the undervalued asset, and money is going to flow to where those undervalued assets are when interest rates go up. That's the trigger point. That's in my opinion, it's the time where people are going to say, all right, I'm getting killed here on my bonds, losing money to inflation, and interest rates going up is going to push those prices down of existing bonds. So all that money is going to rotate, and it's got to go somewhere. Is it going to go into the overvalued stock market where PE ratios are to the moon when interest rates are going up? No, because they have low dividend yields too. When the interest rate goes above the dividend yield, I think it's going to be a bloodbath in stocks. And I'm not saying that it's going to be like a huge sell-off in a very quick period of time. It's going to be a slow sell-off where they just march lower. And commodities are going to start rocketing higher because the commodity market is incredibly small in comparison to the bond and stock market. So every time we've seen this in history, it's like every time, it's not even, it's 100%. Go look at all the commodity bull markets and go look at the housing expansionary phases where commodities were cheap at the beginning. It's 100%. It even did it in the 1920s. And what happens is you get high inflation, you get higher interest rates as it chases, and all the money rotates into commodities. The tapering doesn't matter. Now, the better question would be, how much inflation are we going to get from the expansion phase of real estate that we're going to have? Can we build enough homes to really hit the inflation button? And how high is that inflation going to be? That's the question that I would ask. I wouldn't worry about tapering. All the Federal Reserve does is amplify the moves. That's all it does. It just makes things worse. It amplifies it to the upside and to the downside. So what I suspect to happen, and we have so much debt too, that I don't think they're going to slow the tapering. I think they're going to buy like mad on the bonds to keep interest rates low because they have to. I think they're going to continue to do it. I just think they're jawboning right now. So what I think is going to happen is we're going to get massive inflation. They're going to try to inflate the debt away. They're trying to reset the debt lower through inflation. The problem is the floodgates in the expansionary phase of real estate are open, which means all this money is going to go straight into the hands of people. And depending on how many new homes we can build will depend on the inflation rate, at least in dollar terms. Because I'm speaking all dollar terms. Commodities are priced in dollars, and I'm talking about the value of the dollar. The value of the dollar should go vastly lower at some point. Vastly lower. And that's when the last confirmation is in the dollar. When that dollar drops, it's game on. Commodities are going to rocket higher because they're going to rocket higher from two aspects: inflation, supply, demand. You're going to see a compression of the ratios against stocks and against gold, certain commodities. And then you're going to see the whole complex get priced higher with gold moving up, accounting for inflation. And this could be a big accounting, because if you look at the gold to monetary base, gold is incredibly cheap and it hasn't accounted for anything in the monetary base. It's the cheapest it's ever been. So you could see another move like the 1970s in gold. Gold in the 1970s went up like 25 times, 20 to 25 times. I think we're probably going to see something on maybe not that large. Maybe it is that large. I don't know, but it's going to be big. That's my opinion. The bottom on gold was 1,050 roughly. So maybe we go to $20,000 gold. I don't know. If that were to happen, that means that the entire repricing mechanism of all of these commodities goes up substantially. And what they're trying to do, the Federal Reserve, is trying to hold this all down. They're trying to keep this from going, the gold prices from going up, which essentially holds the commodity complex down. And they're trying to hold up stocks and bonds, I think, because that's where all the retirement money's at for most people. When that money rotates into the undervalued sector, where we've got our massive asymmetric bets, low downside risk, big upside potential, that's what makes investing so fun, because you get these weird setups in history where you look at it and you just say, this is ridiculous. This setup has very little downside, and the upside is absolutely ridiculous. So that's why I talk about physical precious metals. You're out of the system, because they're going to try to tax this to death. They're going to think like these companies are bad, and they're not. They're just in the right place at the right time, and money's going to rotate over and create all these shortages. When you have inflation, by definition, if the prices are too low, you're going to automatically go into shortages. So the prices all have to go up. They're just blaming it on supply chain shortages and disruptions. It's just too much money in the system. That is inflation. It's the supply and demand of money. The supply of money went way up, and the goods couldn't go up as fast. They printed something like 35% of the entire monetary base was created in the past like 18 months. I mean, that's ridiculous. Of course, we're going to have a wave of inflation. It's just absolutely massive. And when this oil and energy prices filter through everything, we're going to see large CPI number increases. Large, vastly larger than what we've seen. And then that's going to wake up all these people that say, hey, this isn't transitory, we have a problem, and all this money is just going to come over and dump into commodities, in my opinion. So that's the way that I see it. Coming on down here. So there's a couple people out there, and the opinion is that we're going to use coal and oil, and uranium will be last because they think it's energy intensive. What I think is, in a declining energy return on investment world, we're going to go with the best things that we've got, irrespective of capital costs. And nuclear, yes, it does cost some money, but it's like the last best source of energy that there is. And what I've done is I've just figured this out before. I guess a lot of us have figured this out before everyone else figures it out. And I think that if we can we're going to move to uranium in mass everywhere, because of the properties of a nuclear power plant. It's stable. It produces baseload energy. It doesn't emit carbon or any emissions, and everyone's going to run at it. And I can't tell you when, but if everyone runs at it, the problem is people want everything now, and the time frame to build all this stuff takes time. So if they flick the old nuclear power plants on, the supply base of uranium can't respond very quickly. It's slow. So what I'm saying is the gap between when they want things and when we can produce it out of the earth or supply it, there's a gap there. And that gap is going to be exposed in much higher prices, because everyone's going to say, I need uranium, but no one's there to produce it. And then what's going to amplify this move is all the financial people are all going to jump in at the same time and squeeze the living heck out of it. And uranium itself and the actual nuclear power plants, it's an inelastic demand. It's probably one of the least elastic of anything. So the potential for the largest squeeze of any commodity is in uranium, because of the nature of bringing things online slowly, and the demand that could potentially come back if we had problems with renewables. And we're going to have problems with the energy shortages in natural gas, coal, and oil, is setting up for what I would think is the largest squeeze that I've ever seen. And then you've got these financial type players that are setting up a New York Stock Exchange type listing where the liquidity could come in and really blow this thing up in the most inelastic demand nuclear, which means that the price could go up tenfold and it doesn't really have a large impact to the end user, which means the price could go up way higher than what you think if everyone piles into it at the same time. So the important portion here is to identify that opportunity and then sit in it. It's not about trying to get pretty. It's not about maximizing every last penny. It's about, this is a huge opportunity over the next 5 years. Sit in it. Because if this were to play out, we're going to see far higher prices because of the timing mismatch between the supply and then the demand piling into it. The short-term movements, they just don't matter because of how big this could potentially be. So that's my opinion on the uranium sector. It's going to be ridiculous how high this can go. Now, here's another one. It says the value can also be owning the carbon credits early and being able to use them as future revenue streams later. I started to scale into Carbon Streaming Corp. They brought the royalty business model to the carbon credits market. They finance carbon offset projects and get the rights to own the carbon credits they create later. So it's a risk-free way to own future revenue streams in a commodity that has to go up in price. Yeah, so I'm not like an expert in carbon credits, but here's my honest opinion. I think carbon credits are stupid. I mean, I think there could be a bunch of money made there. I don't disagree with that. I just think in general it's stupid that the very thing that provided the advanced society to humans is going to, what we're doing is we're just going to increase the price of energy everywhere. We are going to drastically increase the price of everything with carbon credits. And we're going to try to subsidize those areas where they don't emit carbon. Now, what if we get into a scenario where, I'm just going out on a limb, that if we go this carbon credit route and we just raise the price of everything, that people literally can't afford energy. And that we have to start thinking about, I don't know, poorer areas in the world that, I mean, literally they're struggling to live, just period. How humane is that? We release a little bit of carbon into the atmosphere and they live, or we price them completely out of the market and say, good luck. I mean, I don't know. I'm just throwing an idea out there. But if that is the case, all I see in carbon credits is that it's going to raise the cost of energy dramatically. If it raises the cost of energy dramatically, the best, cleanest energy source is uranium. And I keep going back to uranium. It's also has a high energy return on investment. So when people figure out that you can't run renewables, if plan A of renewables, and renewables are not renewable, it's a joke, because you're going to have to continue to replace them every 10 to 20 years, depending on, and it's going to create a lot of trash and garbage, and the environment's going to get absolutely ruined with this stuff. So we're trading a climate problem for an environmental problem. We're going to have to mine all this stuff and create massive holes in the earth to get all this out of all the minerals to do it. And that's going to take a whole bunch of energy. We have not been able to demonstrate that we can get all these minerals out of the earth with just using renewables. So we're going to have to build our grids completely different. We're going to have to build all these grids out. We're going to have to do all this stuff, which is going to take a ton of minerals. And I don't know if we have the copper and the nickel and all these things to do that, at least at the flow rates that they want, how much we're flowing of this. So what they're doing is they're saying, this is our plan, and the plan isn't realistic, where we're going to run into problems implementing that plan. So what I'm kind of proposing is they're going to raise the cost of all the existing energy through the roof. They're going to go into this plan and say, this is our plan, and the plan can't be executed because we don't have the mineral flow rates to get that stuff in there, because it takes 7 to 9 years, 10 years to get a huge copper mine into production. So you get these huge gaps where it's like, what do you do for the 4 or 5 years? They're going to be like, flip these nuclear power plants on, but you get this huge gap in getting uranium supply. So you've got all these gaps everywhere where price could go absolutely vertical in a whole bunch of different things. And some of this stuff is already declining in production, like platinum's declining. We're going to start to see probably silver start to decline at some point. We're going to start to see gold decline. We're going to start to see all these minerals start to decline. Copper's probably got another 10 years in it before that starts to decline. And we're already hitting points in low ore grades in some of these where the input costs of energy are going to rocket higher. So now you're in this like catch-22 scenario where you've just put all these carbon credits on oil, coal, and natural gas, and the cost of those are like shooting through the roof. You've got these minerals that they're in peak minerals, so they're declining in production. We're going after lower and lower ore grades where their input energies are going vertical, literally at an exponential pace upward. At the same time that you just increased all of your other costs. So all of the mineral costs are going to go rocketing higher. I mean, rocketing higher. I mean, I'm just describing why I'm in every single royalty company there probably is, because all they care about is prices and volume. And if you're going to put carbon credits on all your existing energy, which is the cheap stuff that has high energy returns, I mean, you're literally just increasing the cost of all energy massively higher, which is going to increase all of your metal prices, all the mineral costs incredibly higher. I mean, that's all it's doing. It's just increasing the cost of everything. So now, if you're looking at this stuff, I mean, you can pick up physical metals out of the system for super cheap, at super low prices, at super low ratios in relationship to other assets. You can get your royalty companies, which it takes that input cost risk out. And the input cost, I think, that's a known that it's probably going to go higher if we have these carbon credits. And sure, maybe the carbon credits become more valuable, but maybe at some point they look at it and say, we need to remove these carbon credits because the cost of everything is far too high. I don't know. Maybe that's a risk. Maybe it isn't. But I just, the carbon credit thing, I don't know. I feel like we're trading our climate, a climate problem for an environmental problem. That's kind of how I view it. And I think the environment is more important than the climate in terms of the ramifications or the outcome to humans. The climate, we've had far greater amounts of carbon dioxide in the atmosphere than we've had today. If you look at the Jurassic period, it's like 10 times greater than we are today. If you cut off all the millions of years behind and you only look at some tens of thousands of years, yes, the carbon's higher than the tens of thousands of years. But if you go way back, they had far higher carbon in their atmosphere than what we have today. Now, is having all this crap in the air good? Probably not. I agree with that. I'm not for emitting carbon into the atmosphere, but you have to balance and weigh the potential problems and benefits if you're to increase the cost of energy dramatically. So my viewpoint is energy is going to go far higher in costs, far, far higher. The transition's causing problems. Transition from fossil fuels to renewables. The renewables have not demonstrated success in being self-sustaining. Renewables building more renewables. Renewables building and getting minerals for renewables. So if they botch this transition plan from fossil fuels to renewables, which it looks like they are massively, you could see fossil fuel prices go dramatically higher. They're going to throw these carbon credits on top of it. Renewables can generate a bunch of electricity when we don't need it, and they have no way of storing it. I don't know what the heck's going to go on here. I mean, they should have built the entire system up, the infrastructure, and built the storage of electricity first, and then build up your renewables to generate electricity. And just remember, renewables are not renewables. The source of energy is renewable. The gathering mechanisms are not. So I don't know what we're trading off here. Doesn't make sense to me. We have a non-renewable energy capture system capturing renewable energy. So, okay, so what? That solves our problem? We're going to create a whole bunch of solar panels which are toxic that we got to somehow throw away after they're done. And then we got to continue to build them in ever-increasing amounts going forward. I think that it's just we're going to have to use a lot less energy. And energy, a lot less energy means GDPs are going to collapse. Currencies will collapse. And what happens after that? I mean, I'm not calling this out right now, guys. This could be out in the future ways. But I'm just kind of going down a doomsday scenario, that's all. But I think energy prices are going to go far higher in the short term before we solve whatever problems there are in the system. I'll stop it there. Hopefully you guys like this content. Give me a thumbs up, subscribe to the channel if you haven't already, and thank you for listening. This is Finding Value.